All right, guys, welcome to this episode of the All Things REI podcast. We got a fantastic guest, Paul McAllister. How are you doing today?
I'm great. How are you doing, Tom?
Doing fantastic. We're here in your office.
Yeah.
This is pretty sweet. I like the setup. You already have your own podcast studio here.
Well, it's starting. We want to start recording, and you're our first one. This is our first podcast.
Yeah, this is actually the inaugural first in-person podcast. Unfortunately, Jeremy couldn't be here, but this is sweet to have an in-person guest as opposed to on Zoom calls.
Yeah, it's so different, right? Still getting used to it.
I know. Here in the heart of Amherstburg in your backyard. Basically, this is a sweet facility. We'll have to play some ping pong after, do some things.
For sure, let's do it.
But Paul, maybe you got to kind of dive in a little bit into an introduction, explain kind of how you got into the real estate space in general, and kind of let people know who you are behind the curtain and outside of the context of even real estate, because I know you have a pretty interesting story how you got into all this.
Yeah, I guess it would start with I have a civil engineering background, construction engineering background. Been doing that for over 20 years. Major projects, the biggest oil and gas project in Alberta, biggest transit project in Toronto, Eglinton Crosstown. Actually, as we record this, it just opened this week.
How many years did that take? Like a whole decade? Like or
no,
even longer?
15.
Holy cow.
I was on that project for about 5 years, head of the cost control of the whole project. I don't say that too loud because we know
always overruns
for that. Yeah. Those overruns. I knew those overruns existed before anyone, I'd say. But yeah, so got into projects, really complex projects like that. And then I was investing for the past, I'd say 15 years or so in real estate.
Mm-hmm.
And then during COVID, I was doing so much, I was coaching as well, people that build portfolios. So I had done so many mortgages. I'm like, I know more than the mortgage agent.
Right.
And I felt, at least I felt like that. And so then I was like, let me try this out. And as I start doing more deals and I start liking it more and more, and I was like, let's go head on with that. So then the past year, me and Aaron Liu, my business partner, we started a team, First Class Mortgage team, and it's been going crazy ever since. And we're still investing. So she's an investor, I'm an investor, and even our agents are investors. So we always will focus on the investors, right? And it's cool. I think one of the things we'll talk about today is like how you go from like the beginning investor where you think that you're going to want to buy a single family house to, now I'm into duplexes or triplexes or adding value like the ADU stuff, or even commercial, right? So like there's levels of it. And,
absolutely.
I feel like we're definitely going up on those levels. So that's what got me into it. That's my kind of background. I don't want to, there's too many things to mention. You tell me. I could do an introduction any different way.
No, I love it. It's interesting. It seems like there's a ton of engineers who get into real estate. I'm one, you're one, and I know we probably know several. It just seems like there's some correlation there. It's interesting. What kind of engineer were you?
A civil engineer.
Civil, engineer. Okay.
Up on my wall right there. The only thing I hang up is the civil and the construction. I think it's because we like figuring things out. Yeah. And that's what investing is. One, it's vision, and then two, it's figuring it out. And that's what led me into mortgages, because I was like, I want to know exactly all of the things behind the scenes when you're talking to a mortgage agent. I had one that really didn't give me much behind the scenes. He's like, give me the documents, I'll get it approved. And I'm like, no, how does it work?
Right. You want to see behind the curtain the processes and how to optimize things.
What do my numbers look like? How can I improve my numbers? And so I never really got that. And so as a mortgage agent, that's one thing I really preach to our agents and myself, like, show people them if the engineers, and we have a lot of engineer clients, show them the numbers, show them how it works. They want to improve. It's not just about buying the first deal, it's about how many, like, they want to see further down the line. And that's what I think the engineers are good at. They're like, oh yeah, I know that, so now I don't have a car payment, and I'm against car payments, because I know how it affects people's ratios and how it affects, even though easily could afford a car payment, but I don't like how it affects my ratios, and I just always want to be ready for the opportunity. You can see my luck is when you're ready for the opportunity before it comes.
You got to prepare ahead of the way.
Yes, so be prepared for anything. So I just like being prepared, and that's why I don't do car payments.
That's kind of like the Dave Ramsey where we can brand it in Paul McAllister way.
Yeah, I like that.
As an engineer too, I think there's something about running the numbers and crunching things.
Yeah.
I like that a lot. But maybe for the guests who aren't engineers too, what's the number one biggest myth about being a mortgage broker or financing a property that people maybe get wrong? Because I bet people didn't realize that the car payment affects them as drastically as you say.
Yeah. So I think the biggest thing people get is they think they can't afford to buy, or they think they can't afford to invest yet. I hear that all the time. And I was like, how do you know? In their mind, that barrier to say that, oh, I can't afford, they've never looked at it. Like they don't know that, for a $300,000 purchase, you need 15 grand more or less, right? And if you don't have 15 grand, let's figure out how do you get to 15 grand.
Mm-hmm.
So I always encourage people to try to get pre-approvals. They're free. And they're educational section. Like we use them in our team as just as education process. Maybe you're not there, but maybe there's other ways around it. Creativity is another thing too. We have rent-to-own investors who we actually match people with. If you're not there yet, but you're going to be there in the next couple of years, maybe a rent-to-own solution is there. Or maybe there's something that we could be doing. Like some people, I ran into someone the other day, they didn't have credit.
Like zero credit?
Zero credit.
Really?
So
that's kind of rare to come across something like that.
What's happening? So we're like, let's add her to the application. Then she has nothing. She's like, oh, I've never had credit. So it's like you need to get a little credit card, even if you don't want it, just $500,
or like a secured credit card of some kind. Yeah.
Anything that gives you on paper, because even if you don't want it now, sooner or later. So that's one thing is people defeating themselves before they even come and get a check. The other thing from the investor side of things is people think that, oh, I want to buy a single family house and then I want to invest. It feels natural, right? It feels like, oh, I need a place to live first and then I'll focus on investing. But the issue is now you have a liability.
Yeah, it's not an asset.
It's not an asset. And so, but if you just, I've turned so many people in front to first-time investors instead of first-time buyers. And so for one example would be, if you're willing, I always say, if you're willing to live in a unit, people don't know that they can buy something, a 4-unit or a 3-unit or a duplex. They can live in one and still put minimum down payment down. You don't need 20%. You can still put, 5% down and live in a unit. And the coolest part is we can also use the other units to help improve your application, to help improve what you can qualify for.
It'll offset your debt service ratios and whatnot.
It will help what you can. So, for example, you might be able to afford $250,000, but if you're willing to go into a triplex and live in one unit, because that leads me to another thing of like.
Oh, it's fine. Go into it.
I'll stay for a second, but as long as you're willing to live in the one, we can use the other two, and now you can maybe afford $300,000, right? So we can influence what you can afford based on that rental income. And the cool part about that to me is you live there. Now the rent actually, you have to be willing to be a landlord. People always forget that part. But now your actual monthly burn, like your spend is actually being offset with the rent. It's going to help you save for another down payment. It's going to help your cost flow or your cash flow per month increase. And now you can save up. When you move out and buy that second home, right? Whether it be, if you can keep going with this and keep moving if you wanted to, and I see people do that. I actually did that. But now when you move out, that one that you're living in becomes another impact to the application, right? So now you have 3 units, if it was a triplex. Now you have 3 units that is helping your income to qualify for that dream home, right? So temporary sacrifice is something that I really preach. It's harder when you have the kids and the family and all those things, and do they want to move? But, when you're single, take advantage of, people think 5% down is based on first-time home buying, and that is not. So that's one of the biggest myths out there is to be an investor, you need more. 5% down is based on primary residence. So I have a guy right now in Toronto. He has a house there. He's buying a secondary property. He's going to put 5% down on the secondary property. It's about primary residence and residence in general. It's not about first-time home buying. First-time home buying, you do get land transfer tax and using your savings account. Like there are benefits, but it's not related to 5%. And I think that's like a big myth that we should have a big campaign that people make sure that they know that 5% down is not really to being a first-time home buyer.
What do you say to people who say, oh, no, I'm putting down 5%. That's kind of risky. I have higher interest rates, or I have the mortgage insurance on top of that.
So when you put 5% down, you're going to have the lowest interest rates because they're insured. Like the government is, yes, you're putting 5% down, you're losing 4% to CMHC, to insurance. So your mortgage will start higher. People think that I put 10 grand down, my mortgage is going to start at, no, it's actually 4% going in the garbage in your eyes, but it's securing the mortgage for the lender and the government. But also that allows them to offer the best rates. All the rates you see that are like the rates advertised, they're always insured rates because from the lender's point of view, that's their less riskiest loans, right? Because the government is backing those and insuring them. So you're getting the lower rates by going with the 5% down. But if you can avoid CMHC, I always say 2 because if I'm putting 5%, I like my 5% going towards the.
Yeah, you want to keep your own equity. Right? Yeah, absolutely.
So 20% down is when you can keep everything. And then the more you put down, so it's 4% if you're putting 5% down, 4% is going towards the government or towards insurance. And if you're putting 10% down, it's 3.1% you're losing. And the more 15%, there's another calculation, I think it's 2.7. So the more you put down, the less you're losing to the insurance. But having the insurance does get you the lowest rates. But I would never say, put less down to get the lower rate. Sometimes I have that conversation with people. But I always say if you can put the 20, put it down. Because then every single dollar goes towards the principal of the mortgage. So
I think it's good too, because then at least you can get your foot in the door. You can hop into the real estate as opposed to having to wait, save up, get your 20%.
Yeah.
I know right now it's kind of deflated in the market, but even a couple of years back, if you're waiting on the sidelines, prices were still increasing. So by the time you save a little bit, the prices have already jumped up quite a bit again. So it's better to at least be in real estate as opposed to hanging out on the sidelines. So that's fantastic.
I talked to so many people. I remember there's a guy in my head at the gym. He's like, I want to do what you're doing. What I was doing at the time, I was turning a single family house into 3 units. We can get into that deeper and how I did that. And he's like, I like what you're doing and I'm seeing it. I'm like, he's like, I want to do it. I have a perfect space. That was in 2021. He was telling me this. And I'm like, yeah, let's have a meeting. Like, reach out, let's go. And that's more for coaching. And he never did it. And I seen him not too long ago this year. And he's like, man, I still want to do it and this and that. Yeah. Imagine, even though the rates we went up, we went down, we're kind of in a weird spot. It's still, he would have gained so much equity if he would have just made the move in 2021.
He would have pushed up the equity either way. It's forced depreciation.
As much as it went down, it still is up from 2021.
Absolutely.
It doesn't matter how much it drops, and it will drop, but it's not going to drop past where it was in 2021. Very unlikely. So, getting in the game is definitely important. And I think another thing people miss is when you're getting into rentals, they always think about like the equity takeout, right? So they're like, I want to get the equity back, and that's my move, right? I'm a BRRRR guy. So
absolutely. You can still BRRRR in 2026.
You can still BRRRR.
Yep.
But a lot of people focus on, I'm going to BRRRR. I want to get the rent right, increase the rents. I want to get the refinance and get a lot of my money back, if not all or more. I have a couple stories where it's a lot more. But then people don't look at like the 10-year projection. What is going to happen after you've taken the equity, you've got the cash flow up? What is happening in the 10 years? And this is where I think the biggest issue with investors are. They don't look at a 10-year gap, like what's going to happen. Meaning you're going to pay down the mortgage for 10 years. What's that going to be after 10 years? Pretty easy to calculate. You're going to appreciate whatever the average appreciation is, and you're going to get cash flow all along the way. Yes, you're a landlord and there's going to be costs that you will not be able to, you got to calculate for that. And there'll be vacancy and there'll be headaches, but you have to realize that I like making money on the equity takeout up front. I want to make money on the cash flow per month. That's going to pay down my mortgage and the appreciation over time. And after 10 years, you look at that. That's what I ask people all the time. They don't know what that is. They don't know what that looks like. Right. And that's something that we do with our clients, and we try to really get them to think long term. And I don't think enough people focus on that 10-year kind of thing.
Because people are thinking short term a lot of the time, what's happening next month or next year. They don't really plan their life out.
Often, it's like they want all these things, but they don't know
how to begin, how to start. So that's nice. You can essentially hold their hand and educate them through the process and grow with them as they step up and they go from those single families to ADUs or what have you.
Yeah, it's all about what they're thinking, right? It's I can just by asking questions, I realize that I can. I think this comes from having kids, but you can ask them questions and then they can come up with. They start thinking differently, and if you can get them thinking differently, like for me, it's all about getting people to buy as much as they possibly can, correctly. All right, it's good for them. It's good for their goals, and it's good for business too. But it's fun to me. This is fun being a part of that journey, making somebody go from 1 unit to 100 units. Right. It's fun being a part of that process. And that's really where my enjoyment comes from this. It's not, I don't really care. The money's there, whatever, but to me, it's just fun being a part of the journey. And that's, I think, what really drives me for mortgages. It's being a part of the journey. Like we do new construction and the ADUs we're going to talk about and the BRRRRs and the commercial lending. Like there's so much different things going on. We didn't say that, we're just the bank and we want to do just first-time home buyers. We have specialists for that on our team. We have, what is the big thing there? Separation. We have a specialist on our team for that. We have farm lending specialists on the team for that. We try to get people that really truly are passionate about those areas. Like we have Aaron that's passionate about commercial. So those are, that's I think the difference of us is we're not trying to do everything, but we're trying to have specialists that like doing what they, their lane.
And you're also, like I said, to drive this home, you're also investors yourselves, which is huge.
Yes.
So you know how that thought process works. You're not just buying single families. So that's fantastic.
And like as the engineer in me, and I think this, I'm just like this. Whenever I see, because we get to see the vision of what people want to build, we figure out how to structure it from a finance standpoint, but we still got to see the construction. And then we get to see the appraisal. We get to see the design, the appraisal. We get to see what actually did happen. Was the vision correct? That makes it fun to me, right? Because I get to see everybody's stuff, and then I can say, hey, maybe you should think about this because I learned this from this person, and maybe So then you start like that's the real fun for me, is that type of like those deals become really fun.
Yeah, where you get to be a little creative, or you get to make it work.
It's making it work, and you never know. When people say, "Oh, should I build a 2-bedroom or a 3-bedroom?" Or should I build a bigger 2-bedroom, or should I put an extra bathroom? Like all those things. I have exactly I know what to do because I get to see every single appraisal, and I get to see like, okay, what is your goal? It's always tied to their goals, and that's what like real estate investing is. And I see some of your stuff. It's like you have a vision, and that vision will impact what you actually do, and where you end up. Right? And I think like I'd love to talk about one of my first deals. So I got into real estate, I think 2012. I was working in the oil sands, and I was just buying single family houses. That's what I thought. That's what I knew. I seen someone else do it, and I was like, I'm just going to buy single family houses. So I just bought 3 within a year. All my money from oil sands was coming back to Windsor. And Windsor, like 2012.
Windsor at the time was cheap.
Oh, man,
still one of the most affordable, but at the time,
at that time,
that's crazy good.
The crazy part is the money. The money you were making in 2012 in the oil sands compared to the house prices was like the money is still there. You're making around the same money there now, but now houses are 5 times more than
price per door has been skyrocketed. Yeah,
I remember I got a house. It was $88,000. I negotiated that hard too, $12,000 off. I was like king of the world negotiation, $12,000 off for $88,000, $120,000, $135,000, and but the crazy part is in 2000 I retired after working out west. Retired. I'll put some quotations there.
Retired from engineering at least. Yeah.
I retired in general. No, I was done.
Done. You hit your number.
I'm like I'm done. I was like I'm leaving. I remember I was heading up corporate, and I was like, I was only one rung up, and I was like, man, this guy's not happy. He's going through a divorce. I was like, oh, that don't look fun. His kids and I was there, and I was like, so I went on a vacation to Guatemala to visit my friends that were living there, and I had an epiphany. I was at this Lake Atitlan, if you've ever been to Guatemala, and people living really peaceful and really calm. And I'm like, they're so happy, and they had nothing, meaning they didn't have the materialistic stuff. And that just hit me. I'm like, wow, these guys are so happy. What's their secret? And that, that was in November. I retired in July. And I just like, I'm done. My boss, like, there's no way you're done, blah, blah, blah. I was like, I'm done. And I was done. I left for 5 years. I traveled Central America. And that was a cool experience. It really, I always say to like, even my kids, like that was my university. Like that was I learned more there in life about who I am and who I want to be than any other time before. But that's my retirement. I forget why we went into the retirement part.
You hit your number from the oil sands.
Oh yeah, because I sold everything. So when I was down there, I was in mainly Guatemala, Costa Rica, about 11 countries, and I basically I was having a lot of tenant issues at the time with those properties I bought, and I was like, sell everything. So this was 2016. So I made money on all those properties.
But it was just before
it went crazy. So I was like, just before it went crazy. So now, fast forward, I have my first son, and I was like, okay, I'm in Guatemala. I've done some crazy stuff down there. We won't get into that, I guess, in this episode. But
that'll be the after hours podcast here.
Yeah, they're just little after hours. But I came back to Toronto, and I was fortunate to get on the Eglinton Crosstown. I ended up getting like 5 promotions within 2 years. And then I got to the top of that project, and that was really fun, really taxing.
As a side note, what do you think was what made you the outlier that you were able to scale and kind of climb the ladder? What characteristics do you think you had that other people didn't that helped you excel? People always ask that, like, nobody does what you did. Like, I always hear that. One, I didn't go to work just to do my job. How can I add value? So I was cost control, management, and I didn't just figure out cost control. I was like, I remember at the time we were taking about 150 days to pay invoices. So I got into the invoicing stuff, like what's going on? How can we connect it? Right.
I was getting into every system outside of cost control. So I had one of the people that used to work for me. She was like, "You're never at your desk." So I had 22 people that reported to me. And she's like, "You're never at your desk." And she's like, "I don't get it." She's like, "I'm always here waiting for you because I want to talk to you about stuff, and you're never here. I don't know how you do your work." Because I had a desk, and I had like 5 desks, 1 desk, but then I had all my papers laid out.
You had
on
mega desk.
Yeah, I needed somewhere to lay my papers out. You can even see my desk because I need to lay papers out. That's how I think. And she's like, "You're never here." And I said, "Well, listen. When I come on this floor," we had 3 floors, but when I come on this floor, I know what everybody's doing out there. I know I've sat down with them and talked about their job. I know what's important to them. They know what's important to me. So when I walk by, they're like, "Oh, I got to make sure Paul knows this." So the information would come towards me, and information was powerful in my job. And so I knew everything because people wanted me to know. I didn't have to send a report. I didn't have to whatever. People would want to say, "Hey, Paul, this happened, and I want you to know." So they knew what was important to me, and I knew what was important to them. And that was more valuable than sitting at a desk and being into the numbers and what you would think a cost person does. But when you're managing 22 people, you have to get creative, and you need information to flow. Like, for me to even think about it, if I went and spent an hour with each of my team members,
That'd take quite a while. Take your whole week almost.
There's 20 days. That's a whole month. And also up and down Eglinton. So Eglinton is 25 stations and stops for light rail transit, over 20 kilometers. So imagine going up and down and trying to see people. So I was already pushing teams before COVID happened. I was like, let's do teams meetings because I could think, I can jump on. You can leverage your time so much.
Yeah, have everyone in one hub, one spot.
So that type of thinking, I was always a visionary in my role in how do we improve things, how do we improve process, and leading people. The hardest part for engineers is engineers usually don't make good leaders.
I can attest to that. Yeah, there's either the bookworm engineers who just love the numbers and like to get in the super details, but that's actually a detriment in my opinion because if you get too much in the details and the weeds, you can't make the high level visionary decisions or steering in a certain direction, you can't really see
Yeah.
it's like you're seeing the forest for the trees, you know?
Yeah, that's exactly
Yeah.
what it's. I had a mentor, a few different mentors on Eglinton that really changed who I am as a human, as a parent, and as even a mortgage agent. And he was like, listen, the issue here is all these smart people, the smartest people on that project. And he's like, but there's so much data and they're so stuck into the data. At the end of the day, you know what? He's like, I make decisions based on the gut. He's like, there's so much data. It doesn't matter what you do. There's going to be issues within the data. But he was like, your gut is smarter than the brain. And I didn't get that. But I thought about that. It really hit me. And I thought about that for years. And it's kind of like poker. Like you have, and I'm a poker player.
A big poker player. I think that's an understatement.
Yeah, I'm a poker player. But it's that gut decision. You have to listen to your gut. And you have to learn to listen to your gut. And you have to learn that when you don't listen to your gut, there's a lot of usually like your gut is smarter than your mind. I say a lot of times because it's telling you something for a reason, and it's usually right. But it's hard to listen to your gut when you're like, oh, the data's telling me this. Well, the data can always be wrong, right? And in this world, data's everything. There's so much data, and it can be stale. It could be like compromised. And even though you feel like, that's even in real investing, you still have to have like that. Does it feel right?
Right. Yeah. If you're underwriting a building and you say something's off here, why? Like the numbers might be not correct or something's wrong. Like why is this not performing? You just got to trust it.
Yeah.
I think that probably happens, and you cultivate that a little bit more with experience. But
for sure, you start trusting your gut.
Yeah. You try to slowly build that confidence with yourself that you can handle certain situations.
Yeah.
Yeah.
So I think like to end, I guess, on why I was able to do it is the people. I was a people person. Being able to cultivate relationships. People didn't realize that leadership is about actually cultivating relationships, building relationships, and trying to collaborate and move forward. And that's what I think I can win with people really well with relationships. And that's why I was able to move what I was able to do. And I didn't get bogged down in, it needed to be perfect or whatever. It's understanding what, like, so even in my, past, I was with the government as well. And what I am is like a communicator. So there's government, there's really technical people, there's presidents. So I would say the presidents are like kindergartens. You have to speak to them in a kindergarten language. And then you have the engineers who are like university level. You have to speak university. So you have to understand who is your audience. Who are you speaking to? And I'm really good at switching like the automation. All right, kindergarten vice president. That means I have literally 3 sentences to say what I need to say, period.
You got to distill it down.
It needs to be boom. And he like, what does he care about? Right? And why is it important to him? He just cares. Kindergarten, they care about why, like me. That's what presidents are the same way. So know who you're speaking to and change your words, your delivery. And don't, like, engineers just want to come and read their 25-page report. I remember we had even when I joined the government, they had an 80-page report on a project.
Oh no!
And
no one's going to read that thing besides the engineers, probably.
They had this. So cost, schedule, and risk are the teams, and claims is the teams that I would deal with, and they all had 25-page reports. They want to give this is what happened. Just a monthly report. They want to give what happened in the month, and I said, listen, guys, we're going to change this. Conclusions are in the front. The very first page, start with your conclusion before we even get into it. Because as a president, we know if whatever your conclusion is going to be like, am I going to listen to this guy?
You don't waste your time for an hour going through a report that doesn't matter.
Exactly. Because they just want to say it and then they want to get to a conclusion. And the attention span, again, the higher you go, the shorter it is. Nobody's with you. And so I would always tell to even professionals, like, don't be so good at your job and produce this 25-page report and not let anybody hear you or read it. You have to start with the conclusion. And furthermore, those 25 pages, I was like, you have 5 pages. You can put the 25 in the appendix, but you have 5 pages. Start with the conclusion. You have 5 pages total, and that's what it is. And if they want to ask a question to go deeper, then we just go to the appendix. And so that's what we started. So now we cut from 100 pages to, there's 4 teams, so 80 pages to 20 pages. And it's optional. Like, we know where to go. Like, the information's still there. But it's hard because engineers like, I did all this work. I want to show all this stuff. But if people don't want to listen, that's the challenge. So I think that those characteristics is how I was able to rise so fast. And then you have like being in Guatemala and Central America really gave me a different. I remember when I walked in Toronto, I'd walk slow, and people walking fast, they're bumping and short. I'm looking at the buildings, I'm looking at the tree, I'm looking at the little bird. Like I was in my own zone, and but when I was locked in, I was locked in, right? And that's something that I feel like people's been. You get out of high school, then you go to university, and then you get a job, and you're just like running this race.
You're moving too fast through life.
You're moving too fast, and you're not paying attention to where you are, and then like, oh my gosh, I got kids. So I was I knew where I appreciated the little things, and I was able to hone in and focus on something, and then literally leave that alone and then move on, right? And I think that's those skill sets, all those things people appreciate when you can be present. Like I think those types of things is what got me to be successful in that part of my career, and it still helps me in my mortgage side too, right now. And that's what helps us. We're moving. Like the amount of what we've been able to accomplish, even in the past month, is incredible. And yeah.
Didn't you win some award? Was it top 100 or top
10% for DLC?
Okay. Yeah.
So it's good.
It sounds like you want it to be even better.
I expect better. I'm a competitor.
Of course.
If we go back to, I was like the captain of every sports team, like growing up in so many different sports, and like that taught me to compete. But I am proud of it because I did have a kid last year. So
Congrats!
I have three kids, 10, 2 years old, and 6 months. So to be able to achieve that by having a kid in that year, I know my wife pushed it out, but still I'm there. And then my business partner also had a kid too last year. So we both had kids. Yeah, Erin. So we both had kids, and she made top 2%, which even makes me more proud.
Good job.
So no, not top 2. Sorry, top 5%.
Still,
but I expect
fantastic.
Top 2%. That's why I say that. This year I would guarantee top 2% there. But top 5%, and then I made top 10. But then another one on our team who we've she was admin who became an agent, and she's top 10%. So that I'm more proud of that of Erin's top 5 and her top 10. And I always shoot big. They always like their son is scared of my goal setting because I'm like, well, I expect top 2% from you and from myself. And sometimes people get afraid of setting that. Because they're like, oh, I don't want to miss it. Or I was like, no, let's just figure out how to get there. And I think right now we're off to a crazy start. I want to say we did around over 20% of our business just in January alone when compared to the last year.
Wow.
And the crazy part is, Erin was saying, oh, let's get into more commercial. Let's get into commercial. And I'm like we're killing the residential stuff. And now I see it. We're killing the commercial stuff. And the commercial's coming, right? I mean, we have, I think, 2 deals funding. It's Friday, yeah, today. They're fun deals, right? I really, really liking the.
What makes a deal fun?
One, the challenge, like reverse engineering. That's what we do for deals. We reverse engineer the deal, and sometimes there's a lot more steps in it. Like if you're coming for a res deal, it's like, all right, I need income, I need this, boom. It's pretty simple usually. I'm not saying because some deals are hard, but commercial deals are so much more involved because. So what's the difference of residential commercial? I think that's a good time to pause and talk about that. So residential side, the lender cares about you as a person or you as a borrower. Like, what is your income? What is your credit? A little bit about the property. But the characteristics. But commercial lending, they care about what are the characteristics of the property. What is the potential? Is it like are you going to occupy it or is it going to be another business? What is the cash flow? What is the potential cash flow? What is it now? What could it be? And then they care a little bit about you, but you're not the very main thing. The main thing is the asset. So they look at what is the asset? What is the vision? What is the numbers? So to me, there's a lot of gray areas of what is it or what could it be. And that's where it's fun to get involved. So for example, there's like, say let's just say a 30 unit deal that we have going in. 10 are commercial and 20 are residential. So it's a mixed use. And it's like, what are the rents? What are the market? What is the market rents? Maybe we're talking about cash for keys. Maybe we're like those types of things. So it's like the strategy stuff is what I love, right? So there's more strategy involved. Like maybe we don't have enough money, so we need a vendor take back. Maybe we're having that negotiation. We got to help them lead that of, okay, a vendor take back is when the seller's actually going to give you some like, do research on a vendor take back. But vendor take backs are important for commercial. They don't exist.
They're the golden
really.
goose.
They're the golden goose in commercial. They don't really exist in residential. But in the States,
happens a lot.
They're huge.
Yeah,
They're
they
huge
call
in the
that
States.
seller finance, but that's huge because
it's big, right? Because in the States, it's like 30-year mortgage means 30-year mortgage, and if you have a 2% on a 30-year mortgage, it makes sense. Like it makes a lot more sense in the States, but in commercial here, it makes sense too. So I think that's the fun part, is this being a part of the strategy. And then just seeing, like, we just had somebody, he did, I think 24 bedrooms, 24 bathrooms, build.
wow.
And
Was this in Windsor or is this somewhere else?
in Windsor.
Okay.
So 24, 25 bedrooms, 25 bathrooms, and big vision, right? And it unique because we got the appraisal done based on the rooms.
Interesting.
The market rooms, right? So people wouldn't know that. You go to like a big bank, they would be dizzy. They don't have no clue what that is.
Yeah.
But to be able to get an appraisal based on the revenue, and that's what commercial is so cool too, because that's why it's based on vision. But we have lenders that would do room rental, right? And people don't know that like that even exists. People don't know that you can get a commercial loan on a residential property. And I'm not saying you always do, and people think that, commercial is going to be way more expensive so it's honestly not.
What would be the benefit of having a commercial loan on a residential?
Well, what if you don't make no money?
Okay.
What if you one, I'm a specialist at doing, like, a lot of people don't like claiming money in terms of
They're trying to
taxes.
offset everything. Yep.
Yeah, so they don't like claiming money, but they're really making money. And if you show me a bank account for 6 months and you're making money, then I can make magic work, right? And magic work means there's a lot of little things that even mortgage brokers don't know how to structure the bank statement program. There's a lot of nuances that I've like studied. I feel like I could write a course on the bank statement programs from different lenders, and it's not like I don't go outside the lines, but there's ways that you can stay within the lines, and you just got to interpret things and a lot of people don't want to spend the time. It's kind of like you go to people, some mortgage brokers don't do investors. I have mortgage agents who send me investor clients because they don't want to spend the time on it. Because if you have 5 properties, that means I need your property taxes, your leases. It's a lot to collect. It's a lot to organize, right? And it's a harder deal. And that's where you got to, same thing with the bank statement program. I'll go through 12 months of somebody's bank statement, figure out how much they truly are making, not how much they're claiming on paper. So I had a good example of this. The guy went to, we'll call it the Blue Bank, and he had a pre-approval for 360, and he just couldn't. He wanted something $500,000, and we were able to. And he was a business owner. He didn't make much on paper because he didn't claim it, but he made a lot of money. I'm like, let me see your bank account, and he's like, why do you want my bank account? I was like, I need to see it. So I get
that's a crazy question. Why do you want to see my bank account? Like, that's usually the number one thing a lender wants to see, no?
It's like usually it's only 3 months. I was like, no, I need to see the year. One, I'm checking what is his net worth, because if you have liquid assets of 150, 250K, we can do a lot of things with that in terms of extending those ratios past normal net worth programs. But then also we can use the bank statement program to justify income. In this case, the 360, we were able to get him 720.
Wow, that's
720. It's B lending, so
that's still nearly double.
it was double.
Yeah, it is double. Yeah,
it was double, and the rate was within 0.5. There was fees up front, so 2%. I think at this point or something like that. Whatever. That's all situational. But the point is, it was worth it. I was like, listen, it's okay. You're gonna make more money if you were to pay taxes on all of the money. or not taxes. Do you know what I mean? If he was going to say, oh, a lot of people say, should I claim all of the stuff I make, or I have options or whatever? And think about how much taxes you're going to pay.
Mm-hmm.
To pay a couple percent when you got to do a mortgage and still be able to not pay all that much tax. If you do the math, it's not even the math.
In the grand scheme of things, it's not a big deal.
What is whatever the percentage he had to pay, and a little 0.5 higher than the A lending.
Mm-hmm.
And people don't realize, like, B lending is, we can get almost under 5%. We can get a 4% right now B lending deal.
That's fantastic.
People don't know that, and it's not that big of a gap. And I always say, like, would you rather A lending with 360K, or do you want to buy your property for 720 and just pay a little bit more? Right. So those are things that, it's really important that we have all these different specialists. And one of my specialists on our team is the bank statement program. And that's, a lot of people don't have the team, right? So like, that's another thing. We're recruiting team members always that have specialty. Mm-hmm. Because we want to be able to have everything kind of in-house. But we're part of a brokerage of about 65 agents or so. And a lot of us have different specialties. And it's not, I don't just try to, like, for example, I know Faith, she loves first-time home buyers, and she has a whole package for first-time home buyers, and she caters to them, and she loves to be a part of that process. Mm-hmm. And I'm like, okay, Faith, that's yours. Or separations. She likes being a part of it. And so, like, that's yours. Whereas, like, if you give me, like, and Erin's the commercials, she loves to figure those out. And I think we'll get into ADUs soon. So I have my little window, and bank statements, one of them, ADUs, new construction. Mm-hmm. But it's a lot of times you go to a mortgage agent and they have that zone. Mm-hmm. And then they have to force themselves outside of that zone of where they're not comfortable, which mm-hmm. they'll look at a bank statement. They're like, yeah, we can't do nothing, because they don't know how to look at it. Right.
You hear that a lot, actually. And then you go to someone like yourself, and then you have options, many options, and you're surprised. Yeah. And that's why you need to usually go to a broker, in my opinion, versus
the bank,
a bank. Well, even a bank in general won't really do a lot of the stuff we're talking about, but brokers are huge to work with as a part of your power team.
Yeah. I really, like, I'll say, I guess I'm a broker, I'm going to say, but here,
or maybe I use the wrong terminology.
No, but think about it this way. So if we have access to the banks, mm-hmm. Usually banks have 7 products. Mm-hmm. And they're going to try to fit you into something that fits within those 7 products. Well, we have 70 lenders that we work with, and they all have the 7 products. And mm-hmm. we know their specialty. We know what they want. We know what they like. We know how they like it. And that's why we bring them the business. And a lot of times we're not charging you for it. Like, we're collecting your documents once, we're pulling your credit once, and we're getting to shop 70 different lenders with all these different programs. Like, the banks can't compete. They just can't, mm-hmm. right? And because we know who likes what, who specializes in what, who doesn't. I think we have the spreadsheet of, like, when we talk about rental income. Earlier we talked about, like, we can use your income. Well, if you go to the bank off the street, they'll say, oh, we'll use 50% of that rental income. But then some banks will say, oh, we need your lease. Well, we know a lot of lenders will just say, oh, we just need a market rent report, and we can use 50, 80, even 100% add to the income. Mm. Then there's other lenders that will let you offset income. Then there's rental worksheets. There's so many levels to that, where some even agents aren't going to know that, right? If they don't work with a lot of investments or investors, mm-hmm. they're not going to know that out of these 20 lenders, this is exactly how they're going to treat the subject property, which is the purchase, or the non-subject property. Mm-hmm. And so that's where specialty and working with somebody and a bank's not going to give you advice on design of what you're building, or like hooking you up with the power team that they already have, right? I have a lawyer that can close something in one day. Try not to say one day, but
that's pretty impressive.
We close a deal in a day and a half. We close for a lender and mm-hmm. a lawyer in a day and a half, from getting it to boom.
That's nuts.
A bank will never in a million years do that. Mm-hmm. and you need to have that team that's working together, that, and that's what we,
Absolutely.
that's the difference of a bank. Like, you can go to a bank, and there's good guys at banks. I see. I'm interested in some of the people at the banks to I know
poach them, bring on
I
your
know
team.
what they could do as a broker. I feel like they could do so much more.
Yeah.
Because there's so much, there's example of this in the industry. You see a lot of bank people, they've been there a long time. They have to become a broker because we could just do so much more, right? So A lending, B lending, private, res, commercial, it doesn't stop, right? And we're not going to different departments with, like, we are the department. And that's why I think it's a no-brainer to work with a broker. Even for renewals, I have a lot of people, like, this is a renewal year of mortgage because everyone's 1.5% are coming up, or those lower rates. I turn those into strategy discussions around, like, what are your goals? What are you looking for? And I spend the time on that. Like, what are your goals for the next 5 years? What are you trying to do? Like, because they're like, oh, should I go fixed or variable? Well, I can't answer that until I know what your goal is.
Yeah, you need to have the full picture.
Right? Yeah, you need to know the picture. You need to know the picture. So I need to ask those questions so they know. Sometimes they don't know. They're just like, oh, I go fixed because I always went fixed. Well, your life was a lot different maybe 5 years ago or 10 years ago, right? Or, oh, I didn't need those, like a lot of people say I didn't need these documents last time. Honestly, 5 years ago till now, the amount of documents you need has increased probably 300%.
Right. The lending requirements have just got a little bit more stringent.
Or
a lot more stringent, I should say.
Yeah, a lot more stringent.
Yeah.
There's fraud going on, and that's one of the reasons that there needs more documents and more due diligence.
So no more Chinese money.
Yeah, you can say that for now.
Yeah.
It's always going to come. It's just
know.
come in different ways. And yeah, it's just come in different ways, we'll say. But the main point is you have to be prepared. And, like, a bank's never you're gonna go to a bank. They're gonna ask you some questions. They're gonna hit their check boxes. I'm trying to teach people, here's how, as an investor, your documents need to be organized. They need to be labeled.
They need to be
packaged. Yes, it helps me for sure because I got to do it, and sometimes I give it back. But they need to do it for themselves. You need to know, this is where my insurance document is. This is where anytime I'm doing a mortgage, I'm going to need my new property tax. So you need to get that skill or hire that skill out of being organized. And it's kind of like we have gotten so good at underwriting in our in-house that we send it to a lender exactly how they want it, labeled how they want it. We know how they're going to look at it. We know exactly they want to know this, then this, then we know how they think. So we're so skilled at that.
That must reduce a lot of the friction too, because then you don't have all this back and forth, all this extra time just being wasted.
Yes, because we know what they're going to ask. We know how they're going to think. We know how they're, like, imagine if they're getting 100 files and they see it coming from us. And they know that we're going to put we're going to put it so beautiful for them.
You make their life easier.
Their life's easier. Yeah. And they're going to know exactly what it is. And the amount of going back and forth is minimal. And when they come to us, we're responding so fast. Those are things that we can get deals approved. You can go to the same lender that we go to lend, and we can definitely get an approval, right? Because of how we put it together, and they know the thought and level of thought that's been put into it. And we're not just giving them shit.
Yeah, you're not just throwing it over the fence and just hope for the best.
Yeah, we're not just like hope for the best. Right? We know when we're submitting it that this is what it is. And sure, there could be some gray in there, but we're going to try to put as many documents so they can figure it out. Right. And that's why when we do a pre-approval, it's so easy. We're on a 10-minute call. We talk about onboarding. We talk about your goals. We ask you certain questions so we know what documents we need. After that, you're going to get an application. It takes 10 minutes online to fill out that application. The application only comes to us, and we build that and use that as our foundation. And then it's like, all right, get us the documents, because people say, how long does it take? Get us the documents quickly, and we're going to get back to you pretty quickly, right? But we don't just give you random numbers. You got to have documents. Documents is, we can't just give you numbers based on a document, and then you give us a document and it's nothing like what you said.
Right.
So some people get annoyed at that. And I'm fine with people getting annoyed at that. I'd rather them get annoyed at that than getting annoyed when they have a live deal and they have an offer and we can't get it approved because we missed something. Right. So you always say, oh, I make 50,000, but they didn't say that it was a contract position that it's going to end in a month. So we want to see that job letter. You know, it's those are things. So no surprises. So and we fully underwrite everything. We go through everything and we look at it from each lender's viewpoint, and that's how we decide where we're going to go. It's a little bit different. If you go to a bank, usually they don't take documents. At least I know a lot of times they're like, you're pre-qualified or you're.
Yeah.
But I always say, have they collected the documents? Have they just told them what's going on?
Mm-hmm.
So that's where you got to be careful and make sure, like, if you're, regardless bank or broker, documents need to be exchanged for you to feel confident in what you're doing.
Let's talk some ADUs now. How about?
Yeah, ADUs.
Yeah.
So what is an ADU? Let's start with that.
Yeah. What is an ADU?
Yeah,
That's
so
the greatest question of
Additional
all.
dwelling unit is the acronym. It's funny because when you start talking to presidents, you can't use acronyms because they have so many different acronyms from so many different. They don't know what an ADU is. So additional dwelling unit and or secondary dwelling unit, it could be called, or in Amherstburg they're calling it ARU.
I've actually haven't heard that one.
Yeah,
Additional.
Additional.
Is it residential unit or what is it?
I think it's residential unit.
Interesting.
Yeah,
Yeah.
it's ARU in the actual new official plan.
I learned something new today myself.
Yeah, ARU.
Right on.
Garden Suite. It's funny because like when I say all these names, it's like if you're in Ottawa, it's this. Laneway Homes. Laneway Homes you'll hear. That's Toronto. And then Garden Suites is like Ottawa. Like so it's funny that wherever you go, again, we do mortgages all over Ontario and all over Canada, mainly Ontario, Alberta, BC. But we even have the Queen of the North in Northwest Territories, the Yukon. We have an agent there. So
Wow.
there's no barriers. Because like when you're an investor, it doesn't matter where you're going everywhere. And we want to go with you. So that's kind of our motto is we want to grow with you. So if you're growing this way or you're growing up, and up meaning from residential to commercial, we're going to grow with you, right? We want to build that relationship, and that's our goal, and that's our model. So let's go back to ADUs. So ADUs, garden suites, all the different names. All it is basically adding a unit to an existing property. So I just did one, and that's why I think
You should tell me about it because I love ADUs. That was the first ever thing I did was make one in my basement.
Yeah. That's I feel like before I talk about the one I recently did, I'll talk about the one I told you about in 2021 when I came back from Toronto. I'm like, I got to get in this again. And I've gotten, about 13 units or so since. But it all started with a single family. And I bought a single family, 3 bedrooms upstairs, partially unfinished basement with a detached garage. I paid over $100,000, the asking or whatever. And, people are like, oh, you're nuts. You're crazy. And if I only showed them the numbers and that 10-year plan, and if they seen it, it would have been, people will be so dizzy. But so I got it for $386. I remember put 20% down to avoid the CMHC. I spent about $100,000 on renovations. So I spent $25,000 upstairs, kitchen, bathroom, floors, baseboard, paint, made it look pretty. And then the stairs are kind of out. I put a laundry upstairs for that unit. So I was living in that unit. And then I converted the basement into another unit, 2-bedroom down there, kitchen, bathroom, whatever, $20,000. And then I spent $55,000 turning in a detached garage into a bachelor unit.
So you had a total of 3 units then?
Yes. So there's the 3. So it's about $6,000 monthly. But then I refied it out right away. And this is what people don't get. Like that refi was 727, 589. I got $272K check.
Wow.
Which was nice.
So you actually made money on that.
272.
Yeah.
So I was in for 172, and I made 100K. And when I mean made, I covered my down payment, that initial 20% of the 386. I covered all the renovation costs, and then $100,000 went in my pocket. And I did that all within, I think, 5 months, 6 months, it's long. When you look back, that's long. And then I went and bought another one 9 months later.
Rinse and repeat.
Did the same thing. This is leading to the actual other ADU I just built. So for that one, spent $25,000 upstairs. So that's a unit upstairs, 2-bedroom, 1 bath. It's coming available for rent in April if anyone's looking.
Hey, there you go.
But that one did really well, actually. So I did that as a short-term Airbnb before now there's like licensing and stuff, even before the licensing. And I had it on Airbnb, and this is where creativity and vision can come together and execution. Because I had it on Airbnb, and I had a guy message me. He's like, hey, can I get that unit? Like, I was like, I had a standard response. People were messaging me about they wanted it. And I was like, I'm not going to say no. I'm just going to say, this is a business. Here's what I more or less make. If you're not above this, then we can't even talk. And I kept always
trying to weed them out.
Yeah, copy, paste. And then after sending that about 20 times, I got a guy who says, yeah, I'm interested. He's like, I'm booking it for a month. And he's like, if my wife likes it, I want it. I ended up getting $2,700 because it was furnished. He was like, he was from Oklahoma. He's building Stellantis. He's like, I don't want to bring all my stuff here.
Yeah.
And he was in there for 2 years. Wow.
And that's amazing too, to have the consistency.
Consistent.
Yeah. You don't have to worry about having a tenant. You try to.
Beautiful.
Yeah.
He said, I need a coach. I got him I didn't get him a coach. I got him I got a brand new, better coach than I have in my house because he just had surgery. So I got him a nice recliner, and he's like, this is nice. I was like, it's yours, whatever you want. It cost me $1,000. And but it 2,700. You got to make sure, like, I give him service. Anything he asked, he got. But it worked out well. But that space was 27. It worked out. A 2-bedroom with its own mother-in-law suite. So it had a detached garage. And I'm getting to the ADU, I promise.
No, you're good.
Detached garage. So I rented everything out. Detached garage. I rented the garage out for $500 for storage. And that's where people always miss. I'm sorry to the tenants, but I never will give a tenant a garage. It's just not coming included. It's not happening. And I don't even try to give it to you and charge you extra, because who am I really going to charge a tenant $500 extra?
Yeah, they're not going to sign for that.
Not happening. So the chances of it is. So I rented everything out. I rented that out. And I'm like, okay, great. I was originally going to convert that garage and add that additional dwelling unit. And then I was like, man, if I rent that out, I could probably get like $1,500 after I do everything. And I was like, but I still lose the $500. I was like, so what? I was like, I'm gaining 1,000. I'm running numbers. Like, I'm a numbers guy, and I want to run them. And I was like, we got to build it behind. My contractor didn't like me because I gave him a tight space to work with.
Right, trying to get all the equipment back there.
Yeah, he did not like that. And he was like, I should have charged you more. But again, there's this art to when you want to get those ADUs done, and it ain't in the summer. So, I knew work was weaning down. And so, we got it approved. We built one. It was 750 or so square feet. Perfectly, to me, the perfect design. 2 bedrooms, 2 bathrooms. It could have been 3 bedrooms, but I felt like the tenant that I'm looking for was better at the 2-bedroom range and 2 bathrooms. It could have been 3 plus 1. But yeah, we started that project, so I got the approvals, and that's why I liked the town I'm in, because the approval was easy.
Yeah, Amherstburg's easy to work with.
Easy to work with, great town to work with for those types of things. Excuse me. And then we got the approval. I did have to get a minor variance. I did argue with them over having to get a minor variance.
What was the minor variance about?
I think it was lot coverage. But I got around the lot coverage because I have a huge parking lot. So it wasn't that. I proved that it wasn't that, but they didn't like that the amount of accessory structure can only be X amount of percent.
Yeah, only a percentage of the area.
It's like 10%. So there's an or statement, and they didn't like how big it, whatever. There was a little tiny minor variance. I did argue with them, like, that's not how it's interpreted. Like, there's interpretation. Me and ChatGPT, and my lawyer as well. I'm sending lender. I send them a letter from my lawyer saying, no, I disagree with this. I don't want to go. But then my lawyer's like, it's not about what the law says.
It's the spirit. And
it's do you want to spend a year going back and forth with these guys when we could be done this project in 3 months? So
another thing to consider. Yeah.
So I spent the $1,000. I went and got it. Whatever. We're good to go. We started construction. So I guess how to fund it. How to fund ADUs. Let's go there since I'm a mortgage agent. I'm getting too much into the
No, you're
construction.
fine. Before you do that, I'm just curious, do you prefer to do new builds for your ADUs, just build essentially everything new? Or would you ever go back to converting a single family and adding the unit in the basement or upstairs and then convert the garage? Because I know there's maybe pros and cons to that. But in your opinion, because you've done quite a bit more than I have, what do you prefer?
Yeah, what do I
Yeah.
prefer?
Or do you think maybe I should say this better for value for others? What do you think the best strategy would be if you're trying to do your first ADU? Would it be to build new or to be to convert something pre-existing?
So to me, it's all about the vision and the numbers. Both of those scenarios can work out depending on the project. So number one, if you talked to me 5 years ago and even the past few years, I would say get a single family house, convert up, convert down, convert detached garage into a unit. It's worked very good for me. And as I just said, like in that example, I got $100K back more than I spent. And also my cash flow was $2,500 a month, right? So we're talking $30K a year,
Right.
cash flow, and then the 100. So that worked well. But now when I compare it to building new, there's other things to worry about. One is what can you do and what can you fund? And we can talk about the different requirements. But then also there's HST, right? There is a HST component on the building new of what I did. Adding units, you can get HST back. So on one unit, it's like, I don't know, I'm not a tax accountant, but it's like 25 to 31K.
Yeah, there's a rebate right now.
The rebate.
Yeah.
And if you're building over 4 units, like 100K. That's in your equation. That's your math has to math, and that's a part of the math. So I guess going back to it, if you can build new, I know my friend Aditya there has the brand new burr. And the brand new burr is basically he's building new, he's refinancing, he's getting the HST rebate, and you end up with $0 in the goal is to get $0 in. So now you have a brand new thing, it's cash flowing and $0 in out of your pocket. So if you can do that and it makes sense, I like it. Why do I like having new? One, I can, one of the issues with some of my earlier stuff was I like separate meters. I don't want to be mixed. I don't want to be covering people's utilities.
Yeah, pass it off to the tenants, less expenses for yourself,
Yes.
more cash flow.
So at first I realized I had all that cash flow, but now I have a bunch of risk in terms of utilities are just going up. Rent, everything's going up.
Yeah.
And I'd rather them be responsible for that up, not me. So one is how much can you generate cash flow? And then it's like, how can I mitigate my expenses? That's the game you're playing. A lot of different, we can have a whole episode on that strategy stuff, like insurance and making sure you're getting the right insurance and utilities. But when you're building new, you can really, really apply strategy. And there's not as much, you have more control, right? You have more control of what you can actually do.
Yeah, you have a clean slate essentially
you have a clean
to do what
slate
you want
and
with it.
You can really be smart about it. Like the ADU I just did, I was really strategic about the parking within those parameters. I was really strategic where the sewer and where everything would go, but I still had parameters because there's structures there. But with the brand new build, you can really, really optimize things better.
I think it would also be easier to make the systematized saying, hey, if I build one, I can cookie cutter this. As long as you have the same lot size, you can just copy paste. Because on my first one, I'll say I had to deal with some crazy things like low bearing beam issues. And you never know kind of what you're going to get. To a certain extent with the inspection you can. But certain things, it's just you have to be more creative depending on the property. So I like maybe the new build route as well, by the way you're telling me.
Less unknowns, right? There is less risk. As an investor, you have to be a risk mitigator. You are a risk mitigator, and that's why my background's cost, schedule, risk. So I have it all, cost control, making sure the schedule, and it's all connected, right? If your schedule goes out, your cost is going up. And if there's more risk that's coming, if you're not mitigating risk, your cost is going up, and your schedule is going up, so it's all connected. But I do like the building new. But the main thing we talked about earlier is don't let that hold you back from not starting. If you got to start with the burr and take the more risk and mitigate risk and be a musician or like to make things happen on what you have or what you can get, you do it. Don't let it stop you. But if you can, then yeah, building new makes a lot of sense in a lot of ways, especially when you're getting lots that you can sever. We just right down the street on this street actually, house for 550K, boom, building an ADU in the back, severed it. 3 other units are going beside it. Like for those types of things, it's like you're getting best of both worlds.
Yeah, absolutely. Yeah.
And then there's also a lot of sneaky stuff for, not sneaky, but you got to just know, a lot to know. For MLI Select, the semi getting 6 units, going from 2 pins, which is 2 properties, to 1 pin, and knowing how to do that and get it through MLI. And like, there's a lot of cool things you can do building new that are just, you can't do when you're trying to retro. Contractors, it's easier to get contractors for new than retro.
Yeah, they don't want to have to crawl in a crawl space or be.
But everything is numbers. Yeah, for sure. Everything's numbers and also strategy. So if you're building old, just make sure you have more contingency in terms of cost and schedule. Making sure the bigger contingency needs to be there. I remember when I was talking about that 25 grand for the upstairs unit, I went in there thinking I was spending 15 and I spent 25. I had to redo the electrical. I'm not going to get in there, do all this work, and then my electrical is going to be messed up for the next long period of time.
Yeah, you might as well.
You got to do
fix it all.
When it's open, don't cheap out. When it's open, spend the money, and spend the money on materials. Don't cheap out on materials. As you're starting, you're like, oh, I got to do this for this budget. No, spend money on quality materials, because the labor is the labor, right? You have the labor there. A lot of people like to cheap out on the materials. No. If I have the labor there and I know my labor cost is going to be the same, I'm spending money on the quality. And I know people, like, if you see a lot of my rentals, people would say that, like, who's put granite? I have leathered granite in a lot of my places for the countertop. And I don't care. Like, yeah, tenants can ruin it and all this other stuff, but there's mitigations to that. And at the end of the day, when I'm burring, my burr strategy, I want to make money on the equity take. Well, before that, I want to make the highest rents, because the highest rents come with usually the highest class of tenant.
Yeah, better tenant profile guaranteed.
The profile is better, so I want the higher rent I can get means the higher appraisal I can get because of revenue. And also so I'm influencing that appraisal by getting the best rents. And when that appraiser comes, make sure when you're meeting appraisers that you are speaking very highly of everything you've done, because that goes somewhere. Pride of ownership means something. Pride of investments means something. When they know you're a professional and you've thought about everything, it means something to the number that you're going to get for your appraisal. Fact.
Do you ever give them, the appraiser, almost like a booklet? Hey, this is what we've done. I know some investors have done that before, and then it shows exactly what you're putting into it, all the little details that they might have missed.
Yes.
Lays it all out for them.
I do. That's, if you told me, I was the one that started that. But
really? Okay.
It's been a long time I've been doing that. Yeah. No, so I'd always have my papers. I was like, why don't I just have this give to them, right?
Yeah, it makes their life easier getting back to how you make the other brokers and lenders have all the information.
Exactly. It's the exact same thing. As lenders, I want them to have every piece of detail to be able to give me what I need. The appraisers, I want them to have every piece of detail there. And if we talk about private lending, that's where, like, I'm a very big specialist on private lending. And there's one lender, I have like a 95% rate of making it happen. I just did a video on it today for a colleague, but like, because of the detail, like when you come up with your ARV, I'm not just saying, hey, private lender, here's what it is. Here's the ARV. I'm saying the ARV is this. Here's the MLS comparables. Here's what we're going to do. We're not just saying we're doing a kitchen. Here's the quotes for the kitchen. Here's the quality of the kitchen. I'm making sure there's no guesswork. I'm giving them the pictures of the unit. I'm giving everything every way that they think, I'm giving it the way they want it. And they know that we're not just, and that even the exit strategy, right? Private cares about exit. So whether it be sale or burr, like you're going to refi it. If we're refining it, I'm saying, here's the application. I know it's going here. And like, it's all details, right? So it's details in this appraisal. It's details in our private lending and just in our lending in general, especially commercial. So that is, I think, where like Aaron has the engineering background. I have the engineering background. And that's what makes us, I think, a little unique, right? Setting things up. So let's scroll back to, I guess, the appraisal. I want to give people advice on appraisals. One,
Yes.
make sure your stuff is clean. I will pay for a cleaner to go to a tenant's house if I need the appraisal to come at a certain thing.
I love
I've
that.
talked to appraisers.
Yeah.
I go to lunch. I make sure I get in their minds. And a clean house, pride of ownership, the way you talk, going above and beyond in that, it all can influence something. I don't care if it influences that appraisal, 20,000. Guess what? I know the banks will give me 80% of that 20,000. I mean,
big
I
difference.
just made 16 grand.
Yeah, for a $100-$200 clean.
Yes,
Yeah.
and I'm not going to keep going into, and one, I'm giving it to the tenants as, oh, I appreciate it. You know, it goes a long way of like, I give my tenants Christmas gifts.
Mm-hmm.
I give them, if they call me, I'm on them. Like I treat my people really nice, and I find that they treat my place nice. And I make it personal. I bring my kid. They know my kid. I make it personal.
I know that goes counter to a lot of people who say, I don't want my tenants to know who the landlord is or what it is. But
yeah, for sure.
I know I have experience with this as well. My tenants below me, because I still house hack.
Yeah.
When you actually care about your own property, they will notice, oh, he's not going to let this go. Or if I mess it up, the pride of ownership is huge in keeping them also in line. Yeah.
It's the levels, right? So
Yeah.
my properties, I got two properties that back onto each other. And it's around the corner from my parents. It's around the corner from my brother. It's very, I still can manage that.
Right. It's
right?
connected. Yeah.
When you stop managing it, I would agree with you. Well, you know, when you have a property manager and you need a property manager, like I'm about that time.
Mm-hmm.
You know, we're building a business. We're doing so many different
Yeah,
things.
you're getting busy. Yeah.
And you do need a property manager. You should be getting a professional, especially when you get to the 13 unit mark. But at that point, yeah, I don't want them to know me.
Mm-hmm.
And there's positives and negatives, right? I'm not going to be their first call. And my property manager is going to handle that very professional to the letter of the law. But then there's things that, you know, you're going to miss.
Mm-hmm.
And at that point, it's probably good that you miss them, because it takes a lot of effort to deal with somebody. You're living with somebody. I've had to manage tenants that I lived with, and sometimes it's good and sometimes it's not.
Oh, yeah.
There's positives and negatives to everything. But I think going to the appraisal.
Yeah, back to the appraisals.
Yeah,
I got you sidetracked.
The clean, it's okay. Making sure you're clean, making sure it's clean, spending a little money on making sure everything is tidy, nice and clean is important. It goes a long way. When they come to me, it's not just that book. I'm giving them every lease. I know they need the leases. They always ask for utilities. I know I'm going to have the utilities of each of the, like, if you pay or they pay, they want to know all that. I just give them the sheet of what they've always asked me.
Mm-hmm.
And whenever they ask me questions, I have, okay, this is what I want. Boom. They don't need to ask me. Here's the book. Here's every unit. Here's what you want to know. Here's the upgrades. Here's what we spent. You know, I give them everything, right? And I want them to know the extras. It's funny, when I walked there, I was, oh, we updated the electrical. They can interpret that how they want, but maybe I just changed the plugs.
Right. You're not lying. It's
their business to interpret, like those little things, but it's, I try to just be very thorough in everything I do. And the appraisal's big. And another little secret, not a secret, but when I got that single family, you know, place, you got to realize how appraisals work. Appraisals, they do 3 approaches. One is the comparison approach. They get a comparable rate. They add and minus based on, like, if it has a garage, they're going to give you this. If yours doesn't, so it changes based on those characteristics. Usually sales in the last 90 days. Sometimes they have to go further, but they have to justify why they're going further when they go further. But when I bought that place, it was $386 and it was a single family house. Think about it 6 months later, and it's producing $6,000 in
completely different. Yeah.
What are they going to go find a single family house that's producing $6,000? They're going to find that incomparable?
No.
They got to compare it to a triplex. It's 3 units. They got to compare it to something generating that $72,000 a year. And so that's how, when they say, oh, how did you go from 386 to 727? That's the exact number. How did you do that? Well, I know how the appraisals work. And so they do it based on comparison. Then they do a cost approach. How much would it be to build? Right? So usually it's a square footage price, like 250 times, in this area, 250 times whatever square foot. That's one of the ways I do that. Garage would be different than a 250. But then they also do there's an income approach. How much is it worth based on the income?
That's almost probably the best bet right there, especially if you're making $6,000.
That's the best
Yeah.
when you're making 72. And that's where having the right lender, having the right broker, having the right agent, it's about. I know what lender is actually going to take that income approach. I know what lender is going to take, not going to take that income approach. They're going to take I know where to go with what type of property. And that's where the income properties, like, you know, and that's where people don't know that the rooming thing, right? Like you come to me with 24, it's really, I think it was 4 or 6 units and, with the 24 bathrooms and 24 bedrooms. And someone could have just said, oh, I'm going to get market rent for boom, boom, market rent in terms of 4 units or 6 units. And that would have gave you X revenue. Or I know that market rent in terms of a room is $800 to $1,200, depending
Much
how nice,
higher.
depending where
Yeah.
you are. And if you times that by 24, I know that the revenue is going to be a lot more. And now we got to figure, okay, what lender is going to take that appraisal to make the client happy. So those are things that people just aren't thinking about. And I'm not worried. That's how I know I'm going to have repeat business, because people know and appreciate the detail that we can get into and help them.
Absolutely. And it helps too if you make your money plus a little bit, then you're not stuck in having to wait to make more money or to get another lender to finance your deals.
For sure.
You can go right into the next one. And then it helps you have that recurring
Moving,
business as well.
right?
Yeah.
And honestly, I always say I started this with when I retired and I sold everything and I was gone. I had to come back. I started from nothing basically again. And people think I built it up forever. No, I had to start back over. You retire for 5 years.
The money started to dwindle.
Things are different. So then I come back, I'm like, all right, I got about like 20 grand. Let's spin this up. And I telling you, I spun it. But I spun it off from the same money, right? That same, from the down payment to the renovations to put in the 100 to go into the next to doing, I did it again in like 3 more months this time. And to spin it up, and I just spun it from the same money. So when people say you need a lot of money, you do not. And I am a little bit different, right? I did make a lot of money on paper, and I have the engineering and construction background, and I have a lot of people around me. And honestly, the team is so important to have. Honestly, the team, I can't express enough that you can't do this yourself. And I couldn't have done what I've done myself. But, you know, using the same money is a skill and an art, and you don't need to have a lot of money. I didn't start this with, when I restarted, I didn't start with a lot of money, and I've been able to spin that money into the same thing. And if you look at every one of my properties, even that first property, sure, it was 386 and I got that huge takeout, 100K. In 10 years, that will be $1 million profit. And I can show you the numbers on that in terms of paying down that mortgage, in terms of the equity takeout I had, and in terms of the appreciation that is likely. And the likely, I'm just going based on not crazy numbers. I'm talking about 3% appreciation or whatever the area is.
Modest. Yeah.
You look at that, it's $1 million. Right? And it's for money that I already took and moved on with. Right? And so that's why I try to tell people, like, don't let all these barriers, I don't have enough. It's usually just fear talking. And you need someone to help you through that fear. And that's what I hope to be. And that's the fun part for me of mortgages, is helping people through. And a lot of people, I had somebody, one of my favorite clients, he actually just messaged me today. He has 2 flips that he just is closing March 3rd.
Oh, yeah.
And we did a growth plan with him. And because he was always coming, he's like, I want to do this. I want to do short term.
All over the place.
All over the place. And it was spinning my head. And it's hard because when you have an application, it's like you're structuring this way, then you're changing, and it's hard for me. So I said, okay, let's do a growth plan. I'll call him Jay. Let's do a growth plan. And we did a growth plan. And basically I said, what do you want? And I don't know why, when I do my coaching, I say, what do you want? And people usually say, I feel like it's an internet fad, but people say, I want $10,000 a month cash flow. That's what people want. Okay. Why?
Right.
Why do you want $10,000 a month?
And you need to get to that level of why.
You need 5
a couple layers
levels.
deep.
Get 5 levels deep. Why do you want 5,000? And he says, for retirement, I want to have money and I want my kids. And okay, let's keep going. What do you want to do for your kids when they're older? Like, and when are you done? Like, when are you done? We're going to retire. How long do we have to get this 10 grand? it starts to become real to people when you start having those, so I had a 40 questionnaire, 40 page, 40 questions, questionnaire to get someone to fill out. And we got really deep, and really what he wants and what most people want when you go through that process is generational wealth transfer. They want to be able to give something to their kids and transfer it, because it's usually not even for themselves. They want to transfer it. So then if that's truly the goal, let's say, okay, what are you doing in the next 5 years? What are you doing in the next 3 years? What are you doing this year? And when I got this Jay guy, he was like, I got to do 5 flips this year. So he was focused on 5 flips, not 1. So when he closed the 1, he was already looking for it. He already had, I think he did 4 in that first year, but he would have never done 4 if he didn't have that plan.
Right. This forced him to actually
he
think
wasn't
outside.
Celebrating. Yeah, he wasn't celebrating. When he closed, he wasn't celebrating. He was just like, all right, boom,
Okay, next
gone,
one.
done, gone. And it wasn't no celebration. And realtors start loving me because, that's 4 deals for them now.
Oh, of course, yeah.
and the realtor is so important in the equation for somebody like that. Because so when I did the growth plan and we came up with it, I actually would sit with his realtor. And I said, okay, Jim said he's going to do 4, said his name. Jay said he's going to do 5 flips this year. So and this is a timeline. We got to do this. The flip, he's going to find the property. It's going to take him, he's going to do these renovations. He needs it to improve the value of this. And it's going to take him 60 days or whatever. Let's put that on a calendar. Let's put that for the whole year. So he only has X amount of time to find it, X amount to flip it, X amount to sell it. And when he sell it, he needs more. It needs to be moving. So now the realtor is a part of the equation. And that's really important.
You're helping build that power team for them in a way.
And if you need the realtor, we would have the realtor. Or and I don't just give it to a realtor. I say, what characteristic, what is important to them? What's the value system? And then out of all the realtors that we work with, does it mold together? Number one. And then also, if they have their realtor, I'm going to be trying to help their realtor
educate them in a way too.
Yes, always educating, because then it's the more educated, you're lifting everybody up with you, right? And that's how you leverage your time. And that's why I spend a lot of time with realtors, teaching and preaching, because I do see the value in it, right? They don't know about, they say, the big blue bank said that approval's this. I have a realtor who will not go into a showing without coming to me, because she was the one that went to the big blue bank and they gave him the 360, and then she came to me and I got the 720. So even if they say, her client might come to her and say, I got approval.
Yeah,
let's
hold on, let's
go see.
Yeah.
And I don't care if they have a better product or whatever, sure, but let's just go see.
Yeah, it doesn't hurt to get another opinion,
because their whole experience could be different. Imagine you had a mindset that you had to buy 360 or 720. Imagine that, and it very little impact. So I think that's really important, is having the right realtor, having that power team, and someone a bank would never be willing to do that. That's why the banks can't compete. A bank's not going to go and sit with a realtor and talk about what renovations the client's doing and how much ARV. They don't care about none of that.
Yeah, that's not their business to real estate invest, really.
Yeah. And even mortgage agents do. Mortgage agents sometimes care about that. Not usually. If you've been that's why I'm an investor. I'm an engineer first, investor second, then a mortgage agent third. And that is the uniqueness of it. And I feel like as an investor, that you truly want to grow, sooner or later, you're going to outgrow your teams, right? You're going to outgrow. And I think that's one of the things we want to talk about is you start off thinking you want to get into, I'm going to guess a single family house or a duplex. And then sooner or later, you start off doing flips, but now he's on the burrs because I was like, yeah, your flips are cool and whatever, but I personally don't like flips, because if I'm spending that much time and that much money, I want to get paid through the refi. It's just like a flip. I don't want to pay taxes yet. And over time, my thing's always 10 years, right? So I get a property, I try to improve it so I can get the highest rent and the most appraisal and the lowest maintenance.
Yes.
I invest. I spend more money to make sure the maintenance and less headache. So we're soundproofing. We're doing we're going extra. Yeah. Because I don't want headache. And then I do my refi. I get my money. I want to get paid there, and I want to get paid my cash flow. But then in the 10-year thing is like, I always have a 10-year plan for a property. And usually it's like, all right, am I selling?
And up trading up, or
Yeah,
just
am I
refi,
selling?
pulling more equity out.
That's where you're getting to the point. Am I selling to go somewhere else? Or am I going to re-up, meaning I'm going to refi and I'm going to try to renovate everything and make sure, every 10 years things get stale. Is the property giving me a lot of maintenance issues? Is the other properties, am I comparing to other properties in the portfolio?
Yeah, what's the outlier? What's the one that's not performing?
Yes.
Get rid of that one.
And am I getting into commercial now? Is that where I want to go? So that's kind of like my thinking and evolution. Like people start off with singles and duplexes, then they go to commercial and development. Like that's all, for me, it's like I want development, heavily at it. And then after that, it's commercial. I think commercial is where it's at. I'm a big fan of commercial, and that's where, I got to put my foot in the water. And as I see these numbers for commercial and these new builds is kind of where it's at too.
That's the trendy thing right now. All those sixplexes. I know there's many people in Windsor at six, but around, even out west in Alberta, it's crazy.
Alberta,
They're just popping up everywhere. Yeah,
a lot of stuff. Anytime the government's giving money out, like I can't wait. My ADU, I get I don't know, it's like 24 to 30. I'm trying to wait for the accountant to finalize. I've never been paid by the government. I was always the one that I give the government everything and I never get anything back, in my opinion. This will be the first time. I don't even know what
you can't wait.
Is it a check? Like, how do I get it? How am I going to see the 30? If it's a check, I might put it on the wall, because how do I get it? Like, I don't know, because usually it's like, oh, it's a deduction from something or whatever. They don't really want to give you money. I was like, are they truly going to give me a check for the 30? So if you can comment in the comments, I don't know if you know, but the HST check, I'm waiting. And then I was like, oh, if I build four units, they can give me $100,000. Is that a check? Like, how do?
Sign me up. Yeah.
So one, the MLI Select is really cool, right? You're getting the lower rates, you're getting the longer amortizations.
Yeah.
I know that they're running out of money. I know that it's very strategic when you're getting into that. I know that
they change the rules often too.
They're changing it now. Well, they're out of money, so they kind of weed out the people. So for example, it's affordability, energy efficiency, and accessibility. And so now, because I was actually just talking to a professional on this, they're focused more on accessibility and affordability, and the energy efficiency is kind of getting pushed to the side. So you're not really getting the points. Like they're just trying to weed out they're out of money. So they just said, all right, they're not out of money, but they're
being a bit more stingy on how they allocate it. They're being stingy on
how they do it, and now they want more affordability and accessibility.
That's why a lot of these sixplexes, they have that one affordability unit, and then that helps push them over the edge, and they're
going for points.
Yeah,
right? It's a point system, and we can break down all the points and how it works.
The more points you get, the more amortization you can receive.
Yes.
So up to 50 years, I believe.
Yes,
right?
50 years.
Yeah.
So there's 40, 45, and 50. And so the more points you get, the more favorable you are toward the amortization. What does that mean? Well, some people are like, oh, I don't want a mortgage for 50 years. Well, yeah, it's not about that. It's your cash flow here and now, and what you can do with that cash flow. And also you have to realize that interest is a write-off on rental properties. Let me say that again. Interest is a write-off on rental properties, right? So that's something that people don't get, and that's a part of running the numbers. I have a little series on Instagram, running the numbers. Let's run the numbers. And it's things like that I try to get into. And the example I gave you of that first burr, that's one of I'm so fresh on it because I'm preparing to do an Instagram, let's run the numbers on the 10-year projection, which nobody talks about. At least I don't see it. You guys tell me.
Not really often, no. Not many people. They just say, hey, I refied, and that's it.
Yeah, that's it. They're not thinking about 10 years or 20 years. And every single property I have and every single unit, I have a 10-year where it's going to be in those 10 years. And some of it's exiting and some of it's not. But how do you know what you're trying to build in terms of retirement? How do you know for me, retirement isn't like I'll never retire, but it's just a lifestyle thing. But it's like when people say, where you want to be in retirement, they don't even know. Like most generations don't know, like in 60, what I'm going to do. I do have a lot of people at 50 that come to me that was like, oh, I need to get ready for retirement in 10 years. I need to get into this real estate investing. But I don't hear 20-year-olds asking me that, or 30, or I just don't see it. And a lot of people aren't thinking 10 years.
What do you think that is? Is it just the generation of millennials and Gen Z and things? Or
I think it's a human thing.
it's a human thing?
A human thing. It's easy to look what's in front of you.
Mm-hmm.
It's easy to see what's in front of you. And that's a good thing and a bad thing, right? You miss opportunity. When I looked at that single family house and I was like, I'm paying $100,000 over, and it's because I seen the upper to lower in the ADU, right? And I seen that $6,000. I ran those numbers. Whereas another person's like, that was worth $120K 15 years ago.
Mm-hmm.
Literally, that same property worth $120,000 15 years ago. And so that's all they see. So they're like, I'm not paying $380K when it was worth $120K 15 years ago. Well, they don't know that now it's worth $700,000. Even still in this market. Yeah. And also another thing is I call it stacking, rent stacking, or revenue stacking, whatever you want to call it. I like multiple incomes from one property. I never want to commit to just one income. And I want.
You're saying not to have it just a single family rented out.
I'll never do it.
There's a lot of risk there too.
I'll never do it.
If the tenant doesn't pay, then there's your mortgage gone, or your mortgage payment gone.
Even a short-term rental, I don't want one. I'm not doing it. There's no way I'm just getting one source of revenue.
There's security in multiple.
Yes.
I think triplex is the minimum to even get close to cash flowing well.
Yeah.
The duplex is, you can maybe do it, but it's tight.
So for
depending.
me, it's hard. It's not easy. For me, I want duplex with a possible third. I want to try. There is, I don't know how many people watch this. I don't want it to explode too much, but there's a new way to me of doing things. And I've never said it publicly. So I'm debating if I say it because to me, it's the future of, like right now, townships, they care about units, living spaces. They don't talk about nothing about storage, right?
You're talking self-storage?
You can call it what you want to call it, but I'm just renting somebody, like I rent that garage for $500. That's $6,000. People are like, oh, that's $500. Who cares? That's $6,000 a year. I know as the appraisal, that's going to increase appraisal like $80,000, more or less, depending on a lot of things.
You just stack storage units in your backyard where you have extra space.
I thought about it.
Yeah. You got a lot of property here too.
I thought about it. Even this property, the person sold this property because he knew the property taxes were going up. We have a municipal ditch going through, and they just did it, and that's like $60,000 or so. I'm still waiting for that bill. Oh wow! And you pay, if you know it's a municipal ditch, you pay, like the owner has to pay. Owners don't pay. So he was like fearful of that, right? He owned the house, and he stopped being able to use. Like he had a stroke, he couldn't take care of the property, and he used to use this office that we're in as a small engine and repair place. Oh wow! And people still come here.
Thinking it's still open.
Thinking it's still open. And so he couldn't run his business no more. He couldn't maintain the property, but he loved the property. He would have never left if he would have had me in his brain. Because I have 2 units there in terms of rental units, like storage units. This could be considered a unit that, our office is renting it from
your corp, yeah. Or your
and
corp
then
to you.
There's another one over here. There's that see this old thing right there? I don't know if you see when you come in. That's another $800. Wow. Then there's another little storage one, $200 there. When you start adding up all the space, I do weddings in the back.
Yeah. I like how you do a lot of things with your property.
You can
impressive.
do a lot, right?
Yeah.
And that's where a lot of people, even when you're in like land development, usually it's like you got to rush because you have a holding cost. But when I bought this property, I knew that there was all these little things that I can do. You give me a blank canvas and we're going to figure out how to make money, right? Make revenue.
Highest and best use, baby.
Highest and best use. And when you come back here in a few years, you'll see what this is. You'll spin. Then we'll have another podcast during construction. But that is where people need to know, like the income stacking. It's not just about the 3 units. I'll give it this. I don't want to give too much away. But it's not just about your 3 living units. There's opportunity on that property outside of the 3 that are legal that you can do. It's not gray. You can do this to make more money. You just have to see it, have the vision, see it. Sure, it could be containers, whatever you want it to be. There are other ways to make money that increases revenue. And you know, I'm not saying just go crazy. You have to think about your tenants. You have to think about that side of it. But as I thought about my tenants in the ADU we have 4 parking spots that's diagonal. They spent 10 grand in concrete just to give that diagonalness, because me spending 10 grand one time on that concrete parking that gives 4 diagonal spots, it didn't block my 6 grand a year for my garage. That garage has to always be accessible.
Right. You can't have someone parking in front.
Nobody can park in front of it, and everyone knows it. I have parking meters just like a parking lot. They know they're assigned parking spots, and if somebody comes, I'm coming quick. If somebody's parking
You're towing that thing, yep.
in front of my 6,000 a year, if somebody's blocking that and he's calling me, I'm going. So I don't want to lock that in, right? And a lot of people, you got to be willing to spend money. And you got to be willing.
That's an old adage. It's true though.
You got to spend it, and I spend it, and I'm not cheap. And I also make sure I give service as a landlord, as a property manager. I give service, and I spend money. You know, people are always talking about increasing rents, and yeah, I do it. But also, I'm giving them $200 for Christmas. Here's your Christmas card. If you're the tenant that I went into one place, they're taking better care than I would ever expect. They made it nicer. I was like, hey, send me the bills for this. I got you. Write-offs again. And the card, I'm not giving them $200. I'm giving them a prepaid credit card for $200 because that's a write-off. I mean, be smart, but be good. And I don't know. What else you want to?
I think that's really key is treating people how you want to be treated. That's perfect. And it goes a long way more than you realize, because people just want to be seen, heard, and loved, and all that jazz. So it helps a lot.
It's people would think, oh, this guy just wants to get all this rent, and I do, but I also give service, and I also go above and beyond.
Yeah, you're not being a slumlord. Yeah, there's a difference.
No different. Like
there's no shame in trying to make money.
Yeah.
And people frown on that too, but there's nothing wrong with that.
People appreciate it. Yeah. I don't have high turnover. And people appreciate, like, damn, he's on it. Like, if it's snow removal, whatever it is, it's like go above and beyond. I try to go 110% in everything I do. Right? If I always used to say, like, a lot of when I manage those 22 people, they would say, oh, how do you give 110% and then still go home and have energy? Well, I said, if you're giving 110% at work, you need to give 10% at your house.
It's not fair. Yeah.
You need to give it to your wife. You need to give it to your kids. You need to give it to your family, because you can't give 110 and not have enough energy to give 110. But here, it doesn't make sense. Something's wrong. You need to figure out how to get to a sustainable state, is what I would say. But it's the same thing in mortgages. It's the same thing in anything I do. 110% or something's wrong.
With giving, just back to that, giving 110% to your family and to everything else, what fills your cup to be able to give you that energy and that drive? Or is it also the vision that you have of your future that's helping push you?
That's a good question. I think this is what I've learned in Central America. Don't do things that you don't want to do. If I built this mortgage business globally, and if I didn't want to woke up and I didn't want to do it, I wouldn't do it. I would leave it. I would just sell it, whatever you want. You have to do things that you like to do. And then that energy, your energy, you know, I could sit here and talk forever. It's a Friday night, by the way. But I can sit here and talk forever because I enjoy it.
Yeah.
And the same thing with mortgages. So I think that's the most important thing. Follow your passion. Do what you like. Don't just try to make money on Airbnb because you think it's cool and somebody else did it. No, like, if you like Airbnb, if it sounds cool and you want to figure that game out in the dog game, figure it out, right? And if it's giving you what it needs to give you, great. If you don't like certain things in it, pay for it. Pay for it.
Hire it out. Give it to someone else.
Hire it out.
Delegate.
I have 5 acres and I very rarely cut grass. Right? So, you know, my neighbor cuts my grass. I helped him buy his machine. I pay all the maintenance. I pay all the gas. I don't cut grass. because I don't really. Sometimes I'll cut it for them if I'm feeling like going for a rip. But those are I don't go to the grocery store. I'm not a grocery store guy. I don't want it. I tell my wife, it's you, or you can order it. I don't care how much it costs to order it. I'm not spending an hour a week, 52 hours a year in the grocery store.
Your time's valuable. And if you go to Costco, you're going to get stuck in the zoo anyhow.
More.
It's like
even more. Costco's a whole nother thing.
I'm right there with you.
Yeah. But I don't want to do things. I try to pay for the things I don't want to do. And that's a part of how I keep my 110. And I'm not afraid to pay for it. I'm not afraid to pay for certain things. Your time is worth money. And if you do like doing things, keep doing them. But that's where I get my energy from and my passion from is if I'm like, whoa, I don't like doing this. Okay, how can I do this without me? My first question. Who do I got to pay? Who's better at it? Who will like doing it? Those are certain questions that you got to ask yourself. At least that's my style, my strategy. And then, I will mention the 4 agreements. I don't know if you know about the 4 agreements.
I've heard about it, but I've never actually read that book. I've heard about it.
Read it. I think I probably got it on this on my library here.
I'll take a look at that shelf after.
100. It's like 100 pages, 110 pages. You can read it in one sitting. But the thing with the 4 agreements is always do your best. That's it's the last agreement, I believe, the 4th. And your best is different every day. You have to realize that. My 110 today will be different tomorrow. And I'm not hard on myself. If I did 110 today and now my 110's down here, I'm still happy with what I'm doing because I know that's my best for that day. If you get a shitty sleep and you wake up and you're having a hard day, not saying there won't be hard days, you got to realize that, all right, you wanted to achieve 110 things, but it's only 50 today. And that's okay, right? So being present, being aware, being grateful, 10 minutes of gratitude, strongly suggest it. In your shower.
Get that negativity out of you.
In your shower, put your gratitude. Be grateful for these hands that they move. Be grateful for the little things. Like when I'm in the shower, I'm just like, ooh, I'm grateful for this nail. Because you ever have a nail that's not there? Oh, it hurts. I'm grateful for these teeth. You have to start with the gratitude. I have something that I do with my business partner. I have something I do with my kids and even my wife. It's called Rosebud Thorn. Have you ever heard of that?
No, I haven't.
So once you start having the kids, it's a great thing for the kids. But Rose is basically, what are you grateful for? What is the best thing to happen today? What are you looking forward to tomorrow? And what was your biggest challenge today? And what did you do about it?
I like that.
So it's good.
It's a good conversation starter too, to kind of get things out.
You'll never realize some of the things you hear when you do that with my kids. Like you would never think that they saw what they saw from their perspective. When they say a thorn, it's like, oh my gosh, I can't believe and you would never get to that conversation if you didn't have this little exercise we do before bed. And the same thing with my business partner, Erin, is like sometimes, oh my gosh, she said that for, and it just gets you to be aware and think. And then
connect
also,
more. Yeah.
You connect more and you're sharing with them. Right? It's a way of, sometimes we're running, right? I feel like we did 20 files in a month. And it's like, you're running so fast, but you still got to you have to pause. And that's where we brought it from our kids to our business. And I strongly suggest trying it out with the people that you care about. Rosebud Thorn. And it's a good way to focus on the gratitude and to understand the different perspective and to share. Because sometimes my kid won't go with it unless I go first.
Really?
I'll say, what's your rose? He said, well, what's your rose? So I got to go first. And then I got to think about what was the best part of my day. Yeah. And then I got to think about what am I looking forward to tomorrow? What was and also how can I put it into he's 10. How can I give it to my 10-year-old, like in that
so he
language?
Can understand it.
Remember I talked earlier about the different levels and the president. How do you put it in a 10-year's eyes about what was truly hard in your day? And then you think about I don't know, I had a hard deal. And
was it really that bad?
Yeah. Well, then he'll say, well, what was hard about it, Dad? Yeah. Because I hit him with that. So he's what was hard about it? Well, I had this hard deal. He's like, yeah, but what was hard about this deal compared to other deals? He started hitting me with and you start thinking. And I really strongly, it's a cool exercise.
I think so. I think there's value in that too, because then you're kind of recapping in your mind over your day. And sometimes you don't process things. A lot of people just are always occupied with dopamine spikes or this or that onto the next thing, and then they don't have a chance to
Yeah, it's like
recall things or be alone with their thoughts in a way. That's how I'm kind of interpreting this here.
It is, and it's always at night for me.
Mm-hmm.
It's always at the end of the day. So it's usually what I learned in Central America was I came back to the rat race. You know, I talked about going slow and, you know, I'm just chilling and
all those siestas and
well, I mean,
yeah.
I would in Central America, I would just, especially in Guatemala, I was in Antigua, Guatemala, and there's 200 restaurants, 20 blocks by 20 blocks, 200 restaurants. And so I would just go around and eat, talk to people, and that would be something like, "What are you doing today?" "I don't know. I'm just gonna go outside and start talking, and see where I end up." Right? And that's I would do that. And in Toronto, it's like people are moving and they're working hard and they're going fast, and I realized that, like, no, you got to learn to slow, and it's the only thing we control is our mind, our perspective on things, and that's where I think. So you said the 110%. I think that's how I'm able to pull all that together to give my energy. And then you have to realize, hey, am I in a sustainable state? Is this something I can do for a long period of time? If not, how do I make it sustainable?
I see. Yeah. You don't want to be drained or start getting burnt out.
Yeah, it's easy. There's what is it called? Darren Hardy. There's this little thing I do once a year for Darren Hardy. I started doing it 10 years ago. It's a balance wheel. Am I balanced financially? Am I balanced health-wise? Am I balanced family? Because any unbalance messes up the wheel. Right? The wheel has to go a level 5 for each of those. And you're never a level 5, but you're aspiring to be. And you're aspiring to keep balance. So are you a level 5 for each? Or are you a level 1 for finances? Because that could affect your family.
Of course, it all cascades into one another.
It all comes together. So, and a lot of time when I would do this, I'd have a big spike up here, and then I'd be down here, and my wheel would be all messed up.
It's janky, hard to juggle everything.
So that's my way of saying, okay, Paul, you've done great here, but now we gotta maybe it's coming down.
What else need to level up this year?
Yeah.
Or this quarter?
Yeah. How can I get to that perfect circle? And perfection again is perspective, and it changes constantly.
So you'll never be perfect, but you can always improve. There's always something you can fix or do better at. There's always something.
Or worse. Better or worse, more or less. Whenever you gain, you can lose. And that's the same thing in real estate. You got to realize that, you're gaining this 10,000. People talk about the 10,000 a month cash flow. They don't talk about the stress that could give you a heart attack and have you gone. So you have to figure it all. Everything comes with positive and negative and balance. So, I mean, that's... my advice to investors would be to get the right power team, have the long-term goals, and know that, and you have to break them down to short-term goals and shorter, and know that it's okay that you're not going to get to that long-term goal, but still have them. You still want to aspire to them, but life will always throw wrenches. Life will always change. And in 1 second of this day, every priority that you think is important to you can change. Usually it's their health, right?
Well, a lot of times too, people sacrifice their health. And they're doing the rat race or they're grinding and think, oh, this is fine. But then if you don't have your health, then how are you going to enjoy anything that you did or you built?
That's what made me retire. That right there.
Really?
Because when I was chasing and I seen that guy, well, 2 people had retired in the past year. And they were out in the oil sands for 20 to 25 years.
Oh, it's got to be hard on your body too. Even if you're not doing the physical labor, just always
it's
being
just
away
grind,
and
right?
going,
We're working
going,
16 hours. I work 4,000 hours a year for 6 years straight.
Yeah, that's wild.
So that's what retirement, that's why I said we needed retirement. And I had a guy, he's like, oh, I have a hot rod. He was in Edmonton. Had a hot rod. He has his own airport, his own plane, and he had a little airstrip on his property. And he said, oh, I'm just going to chill with my hot rod. Within a year, we heard cancer. Within a year, dead.
Wow.
He worked 25 years.
Never got to enjoy any of it.
20 days on, 8 days off. Never. The other guy was, he had a family. He was making $400,000 a year, this guy. And I said, man, you've been making $400,000 for 20 years. I was like, why are you still here? Like, well, I don't get it.
Yeah.
And he's like, oh, it's for my kids. Because he had kids and then he had another set of kids, like 30 years apart.
Oh, wow.
He went to, one of his projects was in Thailand. And he got a second family, a second wife. He married her.
Wow.
And they had a second family. And his wife was maybe 10 at the time. I mean, his kid was 10 at the time, not wife. And he I'm like, why are you here? Like, you've been 20 years, 400 grand. Like, that's a lot of money. He was
Especially if you're staying in Thailand, you bring that money over there.
He was in the
You
UK.
live like a king.
Yeah, they were living in England. But he said, I'm here for my family. And I said, you're here for your family, but your family, he would work 11 weeks on, 3 weeks off. So he'd only go home 4 times a year.
Wow.
And he was doing that for a long time. I'm like, your family, but like
You probably barely even knew him.
Yeah.
Yeah.
They barely knew him, but he was like, oh, they're going to be able to do this and this and this. And I was like, yeah, but they don't want that. They don't care about that. And so that really, those conversations and those events was like, and then seeing who was at the top, I was like, I'm done. I retired. I'm out of here. But all of those things help me and experience, and it brings me kind of that being able to be at 110, being able to stay focused on things. It's a big part of who I am. Right.
I can tell. You're always passionate. You're always having a good attitude. You have the energy. Yeah. It shows. Yeah.
I'm there every day. And if I'm not, our men just walked out. That was the ding. I always say, like, if you had a bad sleep, I'm okay staying home. I'm okay you resting. I'm okay getting your best. And you need to listen to your body. And as much as you're giving 110, if you need to be 110 being sick, then be 110 being sick. And that means, like, I'm getting my chicken feet soup is what we eat.
Hey, good collagen. There's good nutrients in there.
So we have a routine and recovery and all that stuff. Like, be 110 at that. Yeah. Right. And because we all have these plans and these trying to reach for all this stuff, but you have to realize it's the journey that makes this stuff fun. You're not going to be happy with the 10 grand cash flow per month. You think, but you have to get there the right way, right? With planning, strategy, and holistic thinking. And you're not going to hear that much on real estate shows.
No, it's true. Yeah, they say, okay, hit that number, but then once you hit it, a lot of times people, especially like Olympic athletes, because it's Winter Olympics, they get their gold medal, and then what? They get depressed because then what else are they chasing? What else are they doing?
I have friends like that.
Yeah.
I have friends that are just crazy achiever, crazy amount of businesses, and then they're like, what's next? What's the purpose? Right?
Yeah. So all of it's vanity, or all of it's, what's the point of all this wealth?
Yeah, for sure. So
it's a really good point. And I love this talk today. We'll have to have some other podcasts because there's so much to talk about. But no, this is fantastic. So I guess, Paul, where can people find you? Where can people interact with you?
Yeah.
So what I'll also do is I'll put everything in the description and things like that.
Appreciate that. First Class Mortgage Team is our team name. So my name is Paul McAllister. In Instagram, Paul McAllister. First Class Mortgage Team is on Instagram as well. The easiest way is Instagram. We're producing a lot of content. We just started. I would always be having these conversations one-on-one and never putting it online. So this is my year of actually sharing. This is me, who I am, and I'm sharing it with the camera. We're pumping information and a lot of free information out. So Instagram, I would say, is the best place to find me. We do have an office in Amherstburg. We do mortgages throughout Canada, though, residential and commercial. We have a specialist just about in every situation, and if we don't, we'll tell you. So if you have a renewal up, we'll look at your renewal. We'll look at, does it make sense? And we'll tell you, hey, no, go to the bank or go here. Won't even waste your time. We are trying to do things that are right. Right? I'm not trying to...
Not trying to get a quick buck or anything like that.
I'm not the quick buck guy. I want to build a relationship, maintain the relationship, grow the relationship. And because, I always say I could have been anything because I love relationships, right? And that's our relationship, where it started and where we are. It's relationships. So reach out to me, at least have a talk. On there, you can click, there's a book a call with me, and we can jump on a strategy call, or we can jump on a call if you even need advice. I try to protect a certain amount of time just to do that. Some people are just asking for advice, and I'm okay for now to be able to do that. And I don't have a coaching. I do coach clients, but I'm not going to even plug that. Or I do coach I have coaching clients too, but I don't have all of these funnels going and all this stuff. I'm still at the level that I'm down to earth, and I like it. I like being down to earth. That's the easiest way.
Right on. Paul, thanks, man.
Thanks. Appreciate it, brother.
Sweet.
Yeah.
Holy crap. I love it.